Forex Focus brought to you by IG, taking a look today at when the Fed is going to cut rates and what it means for the US dollar as the worm has turned here, so to speak. And the Fed is potentially going from a rate hiking environment of the last few years to the first rate cutting environment since the pandemic. And I want to walk you through how we do project any kind of activity in the interest rate market. Because of course it means nothing for me to come on here and say, oh, I think the Fed is hiking or I think they're cutting. The market dictates a lot of that. Thousands of people active in futures like the Fed funds futures help to project what people are thinking the Fed might do given, employment data, inflation data, all these different things that are going on. And then after that, take a look at the effect on currency markets, because the effect on stocks might be pretty straightforward. As interest rates rose, saw the stock market fall. And now as interest rates are potentially turning over or projecting to potentially turn over in the next few months, stocks have bounced back and NASDAQ's nearing all-time highs again. But either way, I digress. Fed funds futures track Fed activity, and we're looking primarily today at the March timeframe, because the March 2024 futures, that price where the market thinks rates will be after the March FOMC meeting, they've started to shift to nearly 50-50 chances of being where rates are now or being slightly lower. So essentially pricing in a potential interest rate cut. We'll get to that in a second. But aside from looking at the prices of Fed funds futures, which if I do backtrack for just a second, if you take 100 minus the futures price, that'll give you what the market is projecting to be the Fed funds rate after that month's meeting. And so the March 2024 futures being priced at around, let's say, let's just call it $95, just to be super straightforward here. 100 minus that would be 5.00%. And right now, the Fed funds futures are at 5.25% to 5.5%. And so pricing in $95 futures and a 5% even interest rate is pricing in a chance for a cut. Now, of course, you look at this and you see there are a lot of different prices. The market's moving back and forth for the last year here, and it's going to move again between now and that March meeting, but it will start to hone in on either being no change in rates, which would be a price of around 94.75, 94.70 or 65, between that 5.25% and 5.5% where rates are currently, or will stay around 95, or will move higher if more cuts are priced in. Maybe the Fed has to cut 50 basis points or 75 basis points, or it can also move lower than 94.5 and price in another interest rate hike. But that's just how it works. The FedWatch tool, which the CME group puts out, the Fed funds futures are the CME's product. So it only makes sense that they have a good tool letting you know the probabilities of here, the March 20th, 2024 Fed meeting, the probabilities of where the rate will be for that meeting. And we'll dissect this tool further in just a second, but just to show you the last couple of years of action here for a market like the March 2024 Fed funds futures, you can see how this thing has fluctuated. And one, a general idea is the longer duration that an interest rate product has, tends to correlate to greater volatility. Now, that makes sense conceptually, right? Like if we were looking at if it's today, early December, and the Fed is meeting in mid-December, and we're looking at the December Fed funds futures, we have a lot of the information that the Fed has going into their meeting, And we pretty much know, now they can always change their mind, they can do whatever they want, but we have good confidence of what they're going to do if we're in December and we're looking at the December futures. But when you're in, for example, January, February, March of 2022, and you're looking at the March 2024 Fed funds futures, you're going to see big moves because on a given day or week or month, it might be, strong data, high inflation data, and these markets might be moving higher in interest rates, pricing in more hikes between 2022 and March 2024. Remember, we had stuff like the regional bank crisis or the Russian-Ukrainian war, these different things that will move interest rate projections lower, but they'll get kind of less volatile as we approach the actual meeting. And you can see also, when the market got down to a price of 97, market thought that, okay, but in March of 2024, there'll be 3% rates. And then inflation moved even higher in the fall of 2022, and the price got down to 96, which correlates to 4% rates. And then recently, here in the summer and fall of 2023, got down to its lows for price, high for interest rates, when they priced in, above 5% rates, which is where we currently are. And now looking at potential cuts, almost 50% chance of a cut if you're looking at the recent move from around 94.60, 94.70, which is the current interest rate of around 5.25%. That price jump from 94.75 to just above 95 is pricing in what could be the first cut in years, going back to the pandemic. And that's where you could look at those prices there. But you could also look at the FedWatch tool, which here, after you learn how to look at it, how to use it, might be a lot easier because you have at the top there the current rate, which, like I've been saying, is 5.25 to 5.5. It's a range. So let's just call it 5.25, the lower end of that range, which is where we currently are. And then if you look to the x-axis on this graph, you'll see the different potential outcomes that are priced in for this March of 2024 meeting. And you can see the current one, 5.25, has a 59.1% chance. So the biggest chance is that they won't do anything by March. The rates will be the same. But there is a 38.4% chance of being 25 basis points lower at 5%. And there's a small 1.5% chance of a 50 basis point hike, but essentially close to a 40% chance that rates are lower than where they are now, about a 59% chance that they are exactly where they are now, and a small 1% chance that they're slightly higher, essentially a rate hike. Now, what is this meant for dollars? Well, and this is how great markets are. They're so efficient. They're constantly taking in information. The dollar has fallen with these rate projections also falling. And the Fed hasn't even cut rates yet. And so these markets are constantly digesting information and moving off of each other. And you see here dollar versus yen, for example, falling far from its highs as currencies and interest rates tend to be very highly correlated. Higher interest rates for US, higher demand for US dollar, especially given that Japan has been around 0% interest rates this entire time. Now, all that being said, dollar is still relatively strong, much closer to its highs over the last 30 years than its lows against yen, for example. And it might take a lot more than a 25 basis point hike to take this dollar lower. But that being said, you look at the projections for the December of 2024 meeting, and the bulk of the probabilities here are around 100 basis points lower, so close to 4%. And there's this outside chance, around 17% chance of sub 4% interest rates here in the US by the end of 2024. Now, if that starts to get bigger, the outside chance, so to speak, the black swan chance, if you want to call it that, starts to become more realistic and maybe even start to price in potential 3% interest rates or even lower, could mean even further downside for US dollar. But you have it there. They're starting to price in the potential chance of a cut here in the U.S. in the March to April, May area. Could be the first cut there. And you've already seen some downside in U.S. dollar from that. We'll see if they do end up cutting and by how much in 2024.